Have you ever have one of those days you're like, holy fuck, what am I doing with my life? Like, I don't want to be just like all these losers on Wall Street bet and just YOLO things, but I can't, bro. I can stop. It's like, alright, I know that if I stop buying covered calls or stop, trading call options and just doing my own stupid shit, I probably will make $500 per day. But how stupid am I? I just have to fucking do it. It's the same thing with today with Torch, dude. Like, alright, I already have a heavy position on Torch, okay, and then my average is around $5.5. And with my mathematical model and everything I have like on me, right? I know that today is the day to sort of, not really dump some shares, but in order to increase my let me get my pen out, okay? Let me get my pen out. I sometimes I just can't do this, okay? Think about it, okay? Think about it. I know, okay? I know. From yesterday's video on Torch with all the DDs right? And you guys stop watching this shit, okay? Like the Torch video is one of our most viewed videos last week. I have like 500 views. And then guess what? After this day, you guys just fucking gave up. It's not like we have a dedicated following like AMC. People just hold on to it. But let me tell you what, this stock have more potential of having a short squeeze than anything else. Fucking Clove. Doesn't work like that, boys. Do you understand how cover works? How covering your, how a short squeeze works? Like this stock literally have the highest short squeeze potential than anything else because it literally is going to change its sticker to Meta Materials. Like their merger deal is about to close. I mean, extended from today to like on the 30th, but it's about to close. And guess what, dude? If you do the math, okay. So if so let's just do simple math. I'm not gonna go into the very nitty gritty shit. So right now, Meta Materials is at $12. Okay, I bought it in at $7. Okay, on the OEC market, and then I'm already making what, like $5 per share, right? But here's the interesting part. So according to the merger deal, the combined company, let's just say the combined company, let's just use the real price right now. So Metamaterials is $12, and we have Torch right now is, let's just say $4, okay, 4.7. Let's just $5. Let me just tell you, I think the fair value is at least $5, okay, with the potential that Metamaterials have. That's why today I didn't like sell off on the top, which is around 577 fucking jackass. Sorry about my language. Maybe we should beep it out. But anyways, nobody's really watching anyways. So basically, I set my sell orders at 578. Why? Because my model, with my mathematical mind, my Asian mind, right, my superior genome, it tells me that I should sell at 5.78, which is supposed to be correct, right? Because the reason why I want to sell it, because I want to reduce my risk, right? I want to reduce my downside risk, because if I sell like that, I've already made a profit. But right now, I'm at a loss, okay? This is the fourth time in the past 2 weeks my price prediction was 1 cent off and I didn't sell it on time, okay? This is one of the shittiest feeling you will ever have in your life, but this is a part of the trading process. It's a part of the process that you have to learn. Same thing with the LB, right? Sorry, I'm just getting distracted right now. Same thing with the LB, right? I sold it just a tiny bit early, just made a tiny bit of profit. I should have hold on to it just a little bit, right? And then now I'm just have to catch the reverse flag formation because Nasdaq's gonna fucking go down in the next 2 days. But anyways, that's prediction for another video. Let's just go on Torch. So let's say the combined company, okay? Let's say the combined company, the merged company started trading. The merged company started trading at $20 on the Nasdaq. That means what? The previous Torch owner is gonna have around let's say so 25%, right? Let's just do simple math. So you would probably own the shares that worth about $5, okay? And then whoever owns Metamaterial will have $15. So right now, whoever owns Metamaterials, if my prediction is right, you already have an intrinsic $3 increase by the time the merger closes. Okay? And then right now, all of the Torch holders, you're at a 25 cents lost. But it's not that simple. Why? Because if you listen to me, or if you listen to my videos, you bought it at the low at 22nd, you added a lot of shares, you average out your average shares around today by the 24th, you're basically eligible for the special dividend, right? And then my prediction for the special dividend is $1 or 50 cents to $1, okay? Which means if you have 100 shares, you essentially your average price, like your break-even price, will lower by $1. So if right now you have a $5 average, your break-even average is $4. Let's just assume this company doesn't do anything stupid, which they're known for doing something stupid like that, okay? But right now in aftermarket, things are trading up, sort of. But hey, I don't want to jinx myself, so let's just keep rolling with this video. I'm a little bit furious. I'm a little bit juiced up right now. Let's just talk about potential of this, okay? So let's just say it actually closes. Actually, the deal closes, okay? This Torch merger, the deal closes on the 30th. Sorry. The deal closes on June 30th. Which means by that time, the ticker TRCH change it to, I don't know where they're going to change it, something related to metal materials probably, right? Let's just say it becomes MMT, okay? Becomes MMT. That means before the last day, before the day MMT actually exists on the NASDAQ index, they have to cover all their shorts as the hedges or whoever is doing shorts, right? What does it mean? That means there has to be a short squeeze. Unless every single one of you has to fucking dump it and fucking paper hand this shit. So if you actually just hold on to it with a superior average price, you will see a huge short squeeze here. Right? All of the call options you're buying right now, essentially you're buying extended into the merger. Like, are you getting what I'm saying here? Probably not, right? If you're not getting what I'm saying here, please leave a comment down below. So next time I know that I will just simplify all the things I have to say, like just into 1, 2, 3, 4 points. But let me tell you, like really, if you're looking at the merge, so if you haven't listened to any of the shit I've been saying for the past, I don't know, 5 minutes or so, you have to understand that if the merger is going through, this merger is like 90% going through, right? If the merger doesn't go through, this entire thing's gonna crash. I'm gonna lose all my money. But anyways, doesn't really matter. It just means that I'm fucking dumb, right? But most of us are not. And we see the potential of this merger, and this could be one of the biggest mergers in 2021, by the way. Especially, going into third quarter, and I think the third quarter is not going to be as great. But anyways, this is going to be one of the biggest mergers, okay? And then if you look at the price range right now, like the actual fair value, if we were thinking about the price after the merger, you will literally see a $20 price on this merged company, right? So if you just do the math based on their agreement on merger, that means this company, Torch, literally worth more than $5 right now. And then where's it trading at right now? It's at 4.75. I'm furious, boys. Like 4.75 is literally the 15-day moving average, right? And yesterday we also closed at 15-day moving average. That means we're literally trading down, like the story of Clove. But Clove is dead horse, boys. It doesn't okay, so legislative speaking, you have the obligation to close only when there's a termination of contracts, okay? What does that mean? That means, so one of the situations is you have to cover your shorts when, say, when a merger goes through, and then the ticker literally changes. So it literally, like in the books of SEC, like Torch literally doesn't exist anymore. It becomes meta materials, right? So you have to cover your shorts. And what are some other situations you have to cover your shorts? Well, A, you cannot manage to pay your monthly fee for shorting shit. Okay? That's not going to happen to hedge funds. Or your firm requires you to bloody close your position for some reason. Maybe there's some legislative stuff going on. There might be a ongoing bill right now, right? But what's the possibility of that really passing the Congress with the chaotic creative Congress and House we have right now? Probably less than 50%. So this is literally one of your best options to actually see a short squeeze going in action. And then all the media are saying the short squeeze are closing. That's not true. Like there are less than 2% of the shorts are closed in this like gap up right here. Less than 2%. There are like literally over 12% that are shorted positions, boys. Please do your own due diligence. Understand how it goes, okay? Stop being like, we're smart retail traders. We're not dumb retail traders, okay? Dumb retail traders will just listen to YouTubers and start holding bags on AMC without ever even looking at what is really going on, okay? And over again, AMC gangs have been failing me. Why? Because you guys don't hold the right time to hold, and you sell at the time where you have to hold. Because the heart is not big enough, okay? But anyways, I've been ranting for more than 5, maybe 10 minutes now. But what really you should take away from this video is, if you really want a deal, this is actually a good stock to really look into right now. But again, disclaimer, guys, we're not financial advisors. We do not give financial advices, and everything we say on this channel is for shits and giggles only, okay? Shits and giggles only, entertainments only. But the upside literally is up to $6 to $7.5. But now, because of all the dumbasses who decided to dump today, what does it mean? Or dump in between today and yesterday, that means we have a longer time frame. You have a longer time frame to reach $6. Of course you will reach $6. Of course you will reach $7.5, but you will have a longer time frame. And you want to have a spike of volume in the next, 2 or 3 or 4 or 5 trading days. Because right now we're already at June 24th. Mergers close at 30. And guess what? We have the weekends, right? Let's look at the calendar. We have the weekends, okay? The 30th is literally next Wednesday. So it means tomorrow probably going to be an up day or could be a flat day. And then on a Monday, there's going to be a bunch of option flow flowing in. So on a Monday, it's going to be a huge up day. And then on Tuesday, it's like, I don't know what's going on. But Tuesday, if merger closes on 30th, Tuesday is the last day they have to cover. And then on Thursday, and then on Wednesday, it's like, holy shit, what really is going on, right? And then for those of you who are saying I'm always late for action, no, I'm always fucking early for action. All my predictions came true last week. All of the predictions from previous week also came true, right? Who's been watching my oil videos? Only what there? Let's just say the top viewership is 500 view. My oil video was only 50 viewership, boys. And if you watch that oil video, you already made about 5% profit on oil sector. If you watch my close, you probably won't cut your losses on that day. You probably would just dump on the day that, I was like, oh, guys, it's not really such a potential, right? And then maybe you see a huge option flow on Monday. You're like, maybe I will buy in and just reap the 15% profit and just go. I mean, sorry, guys. Like, you're supposed to watch good videos here, okay? I'm just a little bit frustrating here, okay? I'm just a little bit frustrated over here, okay? I mean, again, like, trading with retail players, it's just hard. Like, if you're just an institutional, let's just say I have a mil, okay? Let's say I have a mil. I'm willing to put 2% down for, let's just say, I want to see the special dividend deal if I'm right. So the smartest thing I will do is probably buy in off aftermarket, like this mark, right? So your average price will be like $6.5. Right? Second day, it opens high, goes low, buy the dip, 4.6, average them out a little bit. You literally have a 5.5. Yeah, 5.5. You average out of 5.5, you extend it from today. You can even dump on top, right? But you won't, and then you buy it at 4.7 again, right? I mean, the lower support line is increasing as we speak, but the top side is like narrowing down at the same time. So you will have in the next 2 or 3 or in the next few trading days, what you will see is this gap over here closing down. So the bottom orange line will move up a little bit, and then this, whatever this color is, this line will move down a little bit. And then at one point, it's going to create a two-sided tunnel, like somewhere around here, right? And then what does it do is, wait, let me redraw this. Probably lower than this part, yeah, because all the dumbasses start dumping like midday panic. No, you don't you should not trade midday, because that's where all the algos are trading. And then that's where I'm working on right now. I'm actually working on an algo that I created, and I have to pick up a lot of my Python from before. And I hate coding absolutely, but I still have to do it because I think I have a way of like picking stocks and making money pretty easy. There's no such thing as easy money, but still. So you will see a tunnel like this. So what will happen is it either breaks down, then this stock is over. But when it breaks up, you have a huge upside until 7 and maybe even reach the $9.5. And if all of you actually listen to me and hold on to it, I mean, the sky is this high, right? You basically the cap for this stock right now is how much is Meta Materials trading. So if Meta Materials on Friday go up to $15, then let's just take a 8% 20% discount. That means this stock have an upside all the way up to $9. No? And if Meta Materials trades to $20, what is 2 times 6? 16. You have $16. Upside. For those who want to see upside and potential. Upside, but this is upside potential. Upside potential. Jesus Christ. I can't fucking make this video anymore. Alright guys, I think this is for it, okay? I mean, if you want to hear me rant, and if you want to learn more about the stock market, and we're pushing educational content out too. Like, dude number 2 and I were making those videos. Like, we spent literally 5 or 6 hours filming these videos, and we only get like 20 likes. And then one of our most viewed videos, like I literally just spent 20 minutes whipping it up, and it's done, guys. Alright, please smash that like button, so then we can beat the YouTube algorithm, so then more and more people will know about stock situations, like great opportunities like Torch, right? And also I will have, videos about MTHA, right, coming out, because nobody's covering that shit, right? Nobody's covering at MGTX. Nobody's covering that shit. Everybody's doing AMC or BB or all of those things. Honestly, they're already dead horses that people are just beating content out of them. I mean, they have a loyal following. I want a loyal following, but we're still early in our YouTube days, okay, boys and girls? And you know what? This is it. This is the video for today, and it's about Torch. Like it or not, please watch it. Smash a like button and subscribe if you haven't. All right, and I'll be answering your comments today for the most part, because yesterday things are a little tough. My tummy hurt. Okay, I ate something bad. Yeah, I know I shouldn't be eating something bad. But anyways, and tomorrow's gonna be important, and any day before the 30th for Torch is very important. Anyways, disclaimer at the end, we are not financial advisors. We do not give financial advices. Everything we talk about on this channel is for shits and giggles and for entertainment purposes only. Goodbye, boys and girls. See you on the upside.